Okay, so today we're going to look at something that could seriously impact, your financial future.
Yeah, definitely a lot to unpack here.
We're going to dive into some recent analysis by Nobel Prize-winning economist Joseph Stiglitz. He's looking at the U.S. economy under a potential future Trump administration.
And he's saying some pretty strong things.
Yeah, it's enough to make anyone pay attention.
Oh, absolutely. This is the kind of stuff that has real implications, for everybody.
Jobs, prices, investments, the whole nine yards.
Right. And we've got his insights from The Guardian here. And to be honest, it paints a pretty concerning picture.
Yeah. So let's just get right into it. I mean, Stiglitz doesn't pull any punches. He says that the U.S. has become a scary place to invest.
Strong words.
Strong words from a highly respected economist. So let's break that down. Why is he saying this? What's driving this assessment?
Well, he points to a couple of big factors that are making investors nervous, and the first one is tariffs.
Tariffs. Yeah, those have been a hot topic.
For good reason. Businesses need some level of predictability when they're making these big decisions about, where to manufacture, where to invest their capital.
Yeah, these are long-term decisions. They can't just be changing strategy every other week.
Exactly. And Stiglitz is highlighting this on-off approach to tariffs that we've been seeing. It creates so much uncertainty.
It's like trying to build a house on shifting sand.
Right. How can you plan for the future when the rules of the game keep changing?
And he even asks corporate leaders, point blank, where would you set up shop in this kind of environment?
Makes you wonder if the smart money is going to start heading for the exits?
Yeah, it's a real concern. And then the other big red flag Stiglitz raises is this idea of a contempt for the rule of law.
That's a serious accusation.
It is, and he's got some specific examples in mind.
He talks about, Elon Musk allegedly trying to slash government departments without going through Congress.
Oh, wow. So bypassing the normal checks and balances? Yeah.
Right. And he also brings up how the trade agreement with Canada and Mexico was renegotiated in the previous administration.
So it's like established agreements, international norms, they don't seem to matter as much anymore.
And that's a huge problem for investors. They need to have confidence that the rules are going to be followed.
Otherwise, it's just too risky.
Exactly. Stiglitz even says, the government has a huge number of contracts and we're just tearing them up. How much risk do you want?
It's like the foundation of the whole system is starting to crack.
And when investors see that, they get spooked.
So we've got this uncertainty around tariffs, this weakening of the rule of law, and that brings us to Stiglitz's next big worry. Stagflation.
Oh, yeah, that's a scary word.
It is. For anyone who's not familiar with it, can you give us a quick definition?
Sure. So stagflation, it's basically the worst of both worlds. You have slow economic growth happening at the same time as rising inflation.
So things are stagnant, but prices are still going up.
Exactly. Your money buys less and less, but the economy isn't really moving.
Ouch, and Stiglitz is saying that the policies we've been discussing could lead to this.
He sees a clear path from the investment uncertainty we talked about to slow growth.
Right, because businesses are hesitant to invest in this climate.
And then on the inflation side, he sees the tariffs as a direct driver of higher prices.
Makes sense. Those tariffs get passed on to consumers eventually.
Plus, if other countries retaliate with their own tariffs, it just creates more disruption and more inflation.
So it's like a double whammy.
A recipe for economic pain.
And he also mentions the Federal Reserve. They're in a tough spot here, aren't they?
Definitely, Stiglitz points out that just the possibility of rising inflation is already making investors nervous.
So they're less likely to bet on interest rate cuts.
In fact, he suggests the Fed might even have to raise rates to fight inflation.
But wouldn't that just slow down the economy even more?
It could, which is the whole dilemma here. The Fed's tools for fighting inflation might actually make the slow growth problem worse.
It's a tightrope walk for sure.
And Stiglitz emphasizes that economists are pretty much in agreement on this. Tariffs will lead to higher prices.
There's not really a debate about that.
He says almost all economists agree that the tariffs will increase prices.
So it's not a matter of if, but how much.
Right. And he doesn't see a strong dollar as being enough to offset those price increases.
So we're looking at a potential perfect storm here. Slow growth combined with rising prices.
Stagflation.
And Stiglitz lays it out pretty bluntly. He says, I could certainly see a scenario where we get to stagflation, we get inflation, and a weak economy.
Powerful statement.
And then he adds, I cannot see a really robust economy because I just see the global economy suffering so much from the uncertainty that Trump poses.
It's a global problem.
Right. It's not just the U.S. that's at risk.
Yeah.
This uncertainty ripples out and affects everyone.
Okay, so let's shift gears a bit and talk about the bond market.
Okay, bond market.
So Scott Bessent, the U.S. Treasury Secretary, has said that he wants to bring down 10-year U.S. Treasury yields.
Can you remind our listeners why those yields are so important?
Sure, so the 10-year U.S. Treasury yield, it's kind of a benchmark interest rate that influences all sorts of other rates in the economy.
Like mortgages and corporate loans?
Exactly, and even the returns on certain investments. So lowering this yield is generally seen as a way to stimulate the economy.
Makes borrowing cheaper, in theory.
But Stiglitz has a very different take on how these potential policies might affect those yields.
He doesn't seem to think it's going to be a positive outcome.
He basically says that the only way these policies would lead to lower yields is if they absolutely wrecked the U.S. economy.
Like a full-on economic crash.
He uses terms like running the U.S. into the ground and cratering the economy.
So not exactly a rosy picture.
No, he's saying that if those yields go down in this context, it'll be a sign of disaster, not success.
It's like watching a car crash in slow motion.
And he's very critical of Bessent's approach, he says. In supporting Trump's economic policies, Bessent is helping to get the yield curve down by crashing the U.S. economy. Not a good policy, I would say.
Again, strong words.
He's clearly worried about the direction things are headed.
So let's sum this all up. Stiglitz is saying that we're facing some major economic threats right now.
The big ones are the uncertainty around tariffs and this erosion of the rule of law.
Which is making investors nervous and could lead to slower economic growth.
And on top of that, we have the potential for stagflation slow growth combined with rising prices.
And even the goal of lower bond yields could backfire and signal a major economic downturn.
It's a lot to take in.
It is, and Stiglitz doesn't sugarcoat it. He's basically saying that the U.S. is becoming a risky place to invest.
A scary place to invest, were his exact words.
Yeah, so for our listeners out there, I mean, this is something you need to be paying attention to.
Absolutely.
These are real economic forces that could have a big impact on your lives.
Your jobs, your savings, everything.
So what are the key things you should be watching for in the coming months and years? What economic indicators will tell you if these concerns are starting to materialize?
And how can you use that information to protect yourself and make smart financial decisions?
These are the questions you need to be asking yourselves, because the time to prepare is now.
Don't wait until it's too late.
That's it for the deep dive. We'll see you next time.
Take care.
Bye.